You can see the development expertise and the understanding of the large scale development and the brain power for the land entitlement, and especially on the land development on the large scale. And that's us. Most of you guys have seen us or met us, or we've spoken with you guys. And we're Massive Capital, and Sanjay is here, Mike is here, and I'm here. I think Jasmine is running a little late, but this is us. We are so we have boots on the ground here in Houston and also in Dallas. Our assets goes across 6 states, and we're actively looking for assets. And as we look at it, and our goal is to find better risk-adjusted return, assets with better risk-adjusted return, and putting the right team together with the right skill set that mitigates the know-how of the project. And you'll see how that kind of plays out throughout the session tonight.
Hey, sure.
For us, wait, Mike.
I just wanted to make a couple announcements beside that. So just as an initial thing, so yeah, Jasmine is late. Jasmine's actually working on her book. I think there may be some other people in here that have been part of that book before, the female immigrants book series. So she's working on that tonight. And also wanted to announce, and we'll share in the chat, we're having a meetup for Massive Capital with Legends Equity on this Friday night in Houston. So we'd love you all to join that. We'll share in the chat, and the chat should be up and running. I know a lot of people were not able to get on it earlier, so that should be up and going. If you got questions, comments, things you want to talk about, let us know as we go on through the presentation tonight. Thank y'all.
Mike, thank you. And as we go to the slide pack, Mike, please let us know. We'll take a pause, then we can share more information as we go through. Okay, thanks. All right. So for us, we tend to look at ourselves a little bit more academic buyer. Like, we need to have an investment hypothesis before we take a look at it. And so we have our hypothesis that how do we, when we buy the assets, do we buy one asset class or multiple asset classes, one location versus multiple locations? So we have, this is our investment, I would say the framework that whenever we buy, we look at the portfolio approach, that we believe that investment should be de-risked by allocating your money in multiple different asset classes and also multiple different geographical location. Because if I have it in one location, it becomes additional risk into your portfolio, even though real estate could be a part of your other broader portfolio, right? It's a balanced approach. And when we buy, we tend to buy off market, or we tend to look at assets that we have a little bit more extra know-how compared to the market. That gives us a little bit more understanding, so we can mitigate the risk. And when we buy in a high growth, high income, low cost of living area. And also we tend to buy assets where we have larger population, where Fannie and Freddie will give you the loan, which is population over 90,000. Sometime we'll have the really large MSA, but it's a bolt-on MSA. It's almost like a suburb that you kind of walk over to that. If that kind of a project shows up, then we'll take a look at it. And then last one is the capital stack. We look at the capital stack from recourse, non-recourse, debt, and a prep all together, depending on how it fits into the project. Right? The last project we did, there was a prep and an LP, non-recourse. This one is a recourse with an LP. So we try to put together the right type of financing structure, which is supportive to the deal, rather try to be one way looking at the whole world. And our skill set. So this is a typical real estate value chain on top, from land banking, land packaging, development, then land development. We'll talk about it here, which is entitlement, then the building, go up, building operations. This is where most of us, we operate. This is where we started. And PSC and Massive Capital, all of us, we here, we buy value add assets and we keep it, then we exit. Also from the Massive perspective, we also do land banking. I think 2 of our 4 partners, we buy quite a bit of land, so we understand the land play of it. And then Paul, from the PSC perspective, they have deep expertise in the building development and also the land development. And where we don't have the know-how or skill set, we'll partner. Andrew comes in with his team with the extreme knowledge that we'll talk about it about this project. So looking at together, even though Massive plays typically here, we bring in the right set of partner to mitigate the know-how of the project, and then we look at the overall success. So we try to de-risk the skills, and then which is the operational know-how, and then we take a look at the project to see if that makes sense for us to do the investments. From the asset perspective, last year we bought assets across all the states here that you can see, mostly the Sunbelt assets, and those are some of the assets that we have closed. Again, it's a 506C, and we have a couple of assets going on, and those are just for listing, not for pitching, anything like that. So in other words, we have interesting data points when we compare assets in Denver versus Dallas versus Houston versus San Antonio. We get to compare, and then we get the style or the jive or the economic characteristic of the local location. Then we can make a decision how that kind of plays out. All right, and Paul, I will pass it on to you to talk to the summary of the project.
Yes, sir. Yeah, so this really is a pretty straightforward play. It's a 2-year phase 1 land development investment. We will go on to phase 2 when we do the vertical and the horizontal development. So again, it kind of goes back to our relationships, massive capital, PSC. We've had previous relationships. We've done some other, we're looking at other developments around in this area. But to get something in the Austin Metro is pretty unique. And so we feel very fortunate to be able to capitalize on this property. We have a lot of location knowledge, and this comes from Andrew and Rick, who live in the area. They live in the Austin area metro. They have also done a lot of due diligence on other plots of land in this very area. This area, as you will see in a minute, is growing significantly, and Andrew and Rick have significant local knowledge. And whenever you're doing development, it's great to have that local knowledge, somebody with, you know, the boots on the ground, that they know the city, they know the people at the city council that they need to talk to. All of that is so extremely important to move your project along. We also feel that we were also very fortunate and blessed to get this property at a great price point. Just across the street, basically, there was another 10-acre piece of land that was higher in price and probably not as good of a quality of a site. Our site here is 10 acres. It's very flat. Nothing there that really is causing any issues. We've already done our phase 1 studies, and those phase 1 studies come back completely clean. So we feel very good about this. Other development projects I've been involved with, we get into the soil and there's problems there, or there's some kind of site mitigation we have to do, some water mitigation or something like that. None of that on this site. This site is a very, very clean site, and we got it again for a good discounted price, we feel. Also, this is kind of what a lot of people recognize as somewhat of an infill project, meaning that there's a lot of new development around this site. This is on a road called Shell Road, and this road in the Georgetown area is probably going to be one of the biggest development roads there. There's already plans to widen the road and to make this a more modern road around it. And so we really like that. So yeah, to this slide, you can see right there is a huge thing, a Del Webb Sun City. I mean, you don't get much better than that. That is going to be a significant development there. There's new development all around us. Ours is the white area right there, and the Shell Road that's going on there. The other thing about this site, which is unique compared to the other sites, it has 2 areas of access. So you developers all know that's really, really important to have that. The other area, we just had one in and out, but now we have an egress and ingress on this particular plot of land, and that's really important. So maybe back to the other slide, just wanted to also talk about this little piece about the bridge to recession. You know, we are basically in a recession right now, and you know, with development is a longer term process. It's not like going out and buying a multifamily and you might have stabilization, you know, very soon. This is a process where we do entitlements, all the groundwork, all of the legwork, all the city work, all the phases, the civil engineering, all the architectural planning, all of that. And that takes a while. That can take 1 to 2 years to get all that done. So we feel we're in the right timing at this point, because once we get all that done, we will probably be done with this recession. So then we can start our horizontal and vertical development. And then the other piece here is this, what we call return velocity. And this is only a 2-year investment at this phase one. So you'll get your money out in 2 years. We predict a 45% return. We're projecting, I'll say, a 45% return on your money. So it's better, we feel, for return on your money and investment than even a multifamily deal where you might be in a project about 5 years or so. So we feel that part is awesome. So maybe next slide there, Schreier. And we talked about this a little bit, the location. This is not too far off. If you can see I-35 there, so it's not too far off there. We like the townhome situation because Sun City, of course, will have their development and their living quarters. Right across the street from our plot will be single family homes, some David Weekley homes. And those are very nice homes and very a good development. We feel fortunate to be alongside of those. And then there's other commercial development all around here. So we feel like the site, honestly, just could not be better. This is a little bit of a rendering of what we feel of this as a site plan. We are going to be building 3, 4, and 5 unit buildings. There's going to be about 110 units here. And the other thing we like about this plan is that we're going to have some green space, a lot of green space in the middle here. So families can be there and play and dog park and all that sort of a thing. So it really has a community feel with that. And we're even going to try to put in this little pond up there in the right-hand corner. So we have a little water feature for the development. And so we feel like the whole plan is really kind of setting up nice. This is very early in our site development, so this is going to change somewhat. And even the renderings of our buildings are going to change somewhat. We have to do our full architectural planning, but this is kind of our preliminary plans. And then kind of to the nuts and bolts of this investment, again, it's pretty straightforward, pretty simple, I think. A 2-year project. We were going to have a 7% preferred return and a 70-30 LP-GP split. So again, very typical for a lot of investments that you'll see. But because it's such a quick turnaround, the internal rate of return is higher than you probably would see in some other multifamily. We project, and hopefully this will be up to about a 20% IRR. And then our also projected multiple on this, equity multiple, would be about 1.45. So on the bottom area, this should say a sample projected 100K investment. So again, this is total projection at this point. If you had an initial investment of 100,000, your cash distributions would be approximately 45,000, and then you get your money back, and you have about 145,000 on you after 2 years of your return. So again, pretty straightforward, in and out. Now, again, this is for news for phase 2, but on phase 2, we then hopefully project that possibly some of these investors in phase 1 can then just roll their money into phase 2. And that's a whole nother discussion, and we can talk about that later. But that's the beauty of this phase 1 and phase 2 investment.
Paul, thank you. Really appreciate it. So Andrew would like to take it away, our location overview, and share your thoughts. Please.
Yeah, definitely. So as Paul mentioned, I and my partner Rick live in the Austin area. My home is in Pflugerville, which is just slightly south of this. But we really like the Georgetown area. Georgetown's growing very rapidly. At least a couple months ago, it held the top spot as the fastest growing city in the US. I'm not sure if it's been bumped out. Those change every month, but it was certainly up there and still is. This property is on the northern edge of Georgetown, and it's very close to the Berry Creek neighborhood, or it's part of the Berry Creek neighborhood, I should say. So there's a lot of homes developed out there, you know, high priced single family homes, golf courses. There's a lake out there. It's a very nice little pocket of Georgetown, and there continues to be a lot of development going in that area, including, as Paul mentioned, the Sun City development. There's multifamily development within walking distance of our site. There's commercial development, self-storage, as well as, you know, David Weekly, or there's a subdivision where David Weekly, which is high-end home builder, as well as Gahan Homes, another high-end home builder, are building there. So that's kind of a little bit about just that little area of Georgetown. Now there's very good access on this site too to the greater Austin area. It's located pretty close to Highway 195, which takes you onto Highway 35, which is the main highway or main interstate running into Austin. 35 or I-35 also runs north to south through the entire state of Texas. So it runs up north through Temple and Waco, all the way up to Dallas, and then out of the state and into Oklahoma, and it runs south down through San Antonio and all the way down to the border. So, you know, anything along 35 there, really, there's a lot of growth potential there. So lots of folks are able to just jump right on the highway, head to their jobs in Round Rock or Austin or surrounding areas. And it's a little bit farther out. It's not, you know, right in the heart of everything, but it's still very close, which a lot of folks like. You know, they like the ability to, you know, be a little bit out of the madness, but still close enough that they can get there with a 10-15 minute drive. And Georgetown also has a pretty strong economy that's growing and also benefits from the strength of the economy of other local areas. So there's a lot of companies that are moving into the area, specifically in the semiconductor manufacturing industries. So there's, you know, manufacturing, and then there's also a lot of, you know, just technology in the area. It's very close to Apple's new headquarters. It's about a 15-minute drive from there. You know, the new Samsung plant that's going in Taylor, Dell's global headquarters, all of the tech companies that are located at Tech Ridge and the Domain in Austin, very, very close proximity to all of that. And the population of Georgetown is just exploding as Austin has become a little more crazy, a lot more, you know, folks moving in, prices going kind of nuts. People have started looking to areas of Georgetown to enter into those. You know, pricing is a bit lower. You know, you can get a home at a decent price and still have good proximity to everything. So this is an overview of the site. The site itself is 10.001 acres located along Shell Road. As Paul mentioned, it has 2 points of access. So Shell Road is the main access on the site. However, there's also a private road, which is private road 912, that's along the back of the property, which as a developer is very desirable, makes the project very straightforward. There's no need for, you know, requesting variances or any issues with access for emergency services like the fire department, which tends to hamper a lot of projects. This one, we've got in, we've got out, we've got emergency access, which is very, very beneficial. So for this project, as Paul said, this is phase 1 of this project, which is land development and entitlement. So kind of a step-by-step process to go through is we're acquiring the land as is. We have already performed all of our early feasibility studies. We performed our phase 1 environmental report. That came back clean. We've performed studies for any abnormal geographical features in the area, such as, you know, karst features, things like that, which are common in areas like Georgetown. There's nothing like that popped up that would make us, you know, want to take a step back and say, hey, this is going to be overly complicated. It's a very clean site. It's flat. We have access to utilities along Shell Road. So all of the initial boxes are checked there. We did an extensive due diligence on a neighboring site as well, where we went very, very in depth, did the same environmental reports, worked through, site plans. We had multiple meetings with the city of Georgetown to discuss, their zoning requirements, their utility access, emergency requirements, all those kinds of things. So, through that due diligence process, which actually for us, we've been performing due diligence in this area since February of last year. So it's been almost a year that we've been really going in depth into this specific area and speaking with the city. All of that, site passed all of our internal tests, which is why we felt comfortable moving forward. So, once we close the investment and really start the meat of the work here, we'll be working through civil engineering and architectural planning, MEP, mechanical, electrical, and plumbing, fire life and safety, structural engineering, everything that we need to do to get this project to what would be considered shovel ready, which would mean that we could break ground at that point. So by the time we're done with this project, the land will have gone from just a single large 10-acre parcel to a fully platted and approved project, which our target is 110 units. And we've done enough work with our civil engineer and site planning to know that we should be able to get 110 units. There's nothing that would make us think otherwise. And we'll be shovel ready at that point. It'll be a permitted project. And at that point, we'll move on to phase 2, which would include developing the site with horizontal improvements. That would be things like underground utilities, roads, flood mitigation controls, things like that. And once that's finished, we'd move to vertical construction, which would be construction of the actual buildings, and then a sale of those units. So the first phase of this project, we're projecting two-year timeline on that. About 20 to 24 months is a very conservative estimate that we have. We've based that off of the timelines provided by our civil engineering team, our architectural team, and also our discussions with the city and what they're going to require in their permitting process. So this is just kind of a visual of our phasing here and our timing. So we're anticipating a close on this property in March. At that point, we'll work through the initial site plan, working with our civil and architectural teams, our MEP teams, and our fire life and safety teams to get a good plan together. We'll have a few different iterations of the project to go through with the city. The city will review our plans, give us feedback. We'll work through that until we are finally approved. We're anticipating that's going to be early 2024. We'll also have approved construction documents.
How do they make money? Investor returns come from sale.
Not sure who that was. Anyway, yeah, so investor returns at this will come from the sale of, these lots or this project to home builders. Now, ideally, that will be ourselves, and we'll be able to complete the phase 2 as well. But we've structured this investment to allow an exit point after phase 1. So, if something, isn't looking exactly the way we wanted, for some reason, we don't feel confident in our ability to perform on phase 2, we'll have the ability to take this project to market as well. So we're not going to be stuck in this project for, 4 or 5 years. We do have an exit point built in, and our phase 1 investors will have the right of first refusal to then invest in phase 2.
Andrew, thank you.
Yep.
So, yeah, I can take it from here. So,
sure.
Just to kind of build up on what Andrew was talking about, some of the questions that I saw that we have, we looked at the market risk, we looked at the price downturn, we looked at the characteristics of Austin and Denver versus Dallas and some other cities. So our assumption is that, yes, Austin, so think about stock perspective, Austin and Denver, those markets, and Arizona, Phoenix market, they have a little bit more higher beta. That means they're a little bit more risky, which is they kind of jitter a little bit more, they're up and down a little bit more, but they tend to swing back up much faster than any other city, given the intensity of and how they go up and down. In other way, the market drops, Austin will drop a little bit further than the price, but one day when they come up much faster. If Houston takes a longer dip than come back out, Austin is a sharp ARB. So that's the characteristic of the Austin area. So we took that model and plugged it into our model and say, hey, can we have breathing room into the project? So let's say we go deep into recession, it just doesn't come back, or something happens. So what would that look like, right? So we ran a bunch of scenarios. So we have an extended recession scenario. We have a base case scenario. We said Austin comes back much faster. And hey, life is just crazy. Everybody comes back, turn out in 2 years out, what the volatility will look like, right? So you'll see that we are here right around, we are all in for $4.5 million and out at a $6.5 million. That's the value add from the entitlement perspective. So it's a total 4.5, 2.6 will be debt. It's a non-recourse debt from a local credit union that we have a strong relationship with. We took more than 8 loans with them. So they like us, we like them. That's the scenario. And from the equity perspective, it's about, from the equity perspective, it's about $2.6 million total raise. And then we'll take a debt on 1.9 million. Sorry for the typo. And we're buying the land at a 2.8 million here, and the entitlement cost, and I know it's about 1.1 million, and about holding cost and the other buffer of the project is about 319. So all in all, it's a $4.5 million in. We go through the process in about 18, 20 months or so. We have 6 months of buffer time, but the project is a 2 years in, 2 years out. As Paul was mentioning, very simple process. We come in and we go. Now, I saw some of the questions about price up, price down. And again, from our perspective, we're 2 years out. Recession, we believe interest rate is higher for this year. And we priced that into the property. That other property, that extensive due diligence was done. It was a 3.5. We are at a 2.8. Then you can see that pricing, how we have priced the property. So as we go through the process, we wanted to make sure that we stay closer to the market characteristics, not overshoot the whole market. So based on that, our price point of this property, it is closer to the market, and we have 6 months buffer at the tail end of it, so we can catch the tail end of the market, whatever way the market is deciding. And that's the way we designed it. And also we broke the project out on the phase 1 and phase 2, because that gives us the clarity and the velocity of the money in and money out, and also gives us a lot of breathing room into this project to fight the market, or to turn alongside with the market as we go. Having said that, I think, Mike, you want to take it from here? What the next step looks like, typical?
Yeah, definitely. And I think Sanjay will post, or someone will repost our investor portal into the link. This is for accredited investors only. So this is a 506c offering. We probably should start with our little disclaimer at the beginning as well on these. I think we missed that, but that's good. So the offering is available in the portal now to make your commitment into this, and we have some documentation still coming in. We have the deck there, and we will have the all the offering agreements in there coming soon with the PPM and subscription agreements. So go ahead and sign up. Use the Massive Capital link. Minimum investment we're planning for this right now is at 75,000. If if we see a high level of early interest. What the heck is that? Okay, if we see a high level of interest early, we may increase that from 75 to 100 or 150. So right now we're going to start out at 75, see what see where that goes, and whether we need to increase that or not, just to close it out. So let's see. I think that's it. You can also scan the code to sign up and connect with Trevor Thompson, Candace Stearns, Maria Marks, or Jasmine Salinas, or any one of us that have talked to y'all tonight. Paul, Ryan Lacey, Andrew, Rick on their team, or Sanjay Shrier or myself. So and then we can go ahead into any other questions. This is it's a unique, I think one of the questions was, this is a different time frame and a different opportunity than you might see on other investments that you may be looking at. So the shorter time frame and the opportunity to have first right of refusal on the next phase is a very unique opportunity in this compared to some of the other investments that you're currently seeing. So just wanted to let that know, you all know that as well. I don't think anything else. Any other questions now?
We had some questions like early on about some of the tech layoffs and the high interest rates softening real estate market. I could answer that a little bit.
Yeah, do that. And then if anybody's got any question they want to ask to us, raise your hand and we'll bring you up to the stage and answer, get you to ask in person and we'll go that way as well. And there's also some questions maybe about the geotechnical study, Alta, land title surveys, completed flood zone, things like that, Schreier.
Thanks. Flood zone, Alta survey, and geotech. Andrew, I'll pass it on to you, and I can give a little bit more data on the market perspective, right? So yes, we are in recession. We have a price downturn, and we are seeing the layoffs on the tech. On this, I'll go backwards. So on the tech, you need to separate that out, web tech versus manufacturing tech. So don't forget the China and US separation. That has an impact to the state of Texas because all the high-tech manufacturings are coming in the state of Texas. Dallas and part of Austin is impacted by that. So from any kind of a manufacturing tech perspective, those jobs are here. They're not going anywhere. They're about to grow, right? So we believe Austin area part is web tech and part is manufacturing tech. So it's not quite the way we see the impact we're going to see in Austin area. Facebook is there. Yes, it's going to get impacted. On the other side, or the Samsung or the other manufacturing that we have, especially on the chip fabrication, they're still here, right? So it's not quite, it's a little bit more softened part. And to kind of support that price downturn and higher interest rate, of course, the land price reflects that. The previous property that we worked on, again, it's on the market for 3.5. I believe that is the going rate. And then we pulled the comps, and some of the comps that we saw earlier last year, very early, not when the price was going up. Our price point is lower than those price points. So we believe, depending on, based on the comp and based on the velocity of transaction and the size and the available of the land, especially on the west side of the property, that price point is right at the market today. So in other way, we ask ourselves, hey, if I don't do anything and then just buy the property, go to sleep, wake up after 2 years, what's going to happen? We expect just the bare land is going to come back. It's going to stay steady a little bit, maybe dip a little bit, but on 2 years down the way, it's going to come back out. On top of that, we said, okay, if we're to add value, how much value that we're going to increase, right? So the question that we're asking really is that how do we make sure that we get that $15 a square foot price that we're looking for? So what we said, hey, price is going to drop. So our proxy was, our test case was this new development. That's a brand new development, a little over 600 lots. They already sold about 400. They have 250-ish on the market that they're selling. The price that we are thinking to exit, that is a middle of their asking price today. So in other words, the test case that we have right now, that our exit price 2 years from now, that matches the listed price today for the new development of developed lots. So we gave ourselves in our breathing room, hey, market will go crazy, but market's going to come back, knowing 2 years are light years in the real estate. So we wanted to pass the project at today's price. So another way, we went to the broker, we asked what's the listing price for those lots. Our exit price is lower than their listing price today. And plus we have 2 years on our side. So put together, we felt comfortable at the return, put together, we felt comfortable at that exit price that we have. Andrew, you want to talk about a little bit more on the technical side?
Yeah, so we've completed our phase 1 environmental report, and we also completed a study for karst features in the area. Both of those came back clean. We've ordered our geotechnical study. We're using ECS Southwest as our firm for that. That has not come back yet, but based on our studies that we've done in the area, the soil composition has been very good. So we're not worried about the results there. As I said, we've actually been working in this area for about a year, so we're pretty familiar with what's out there right now already. So we don't anticipate any issues with the geotechnical study. As far as the Alta title study, that's being done as part of our title work and part of the closing process. So that is in progress as well.
That's good. Thank you, Andrew. And I saw a question somewhere about city negotiating with the city. Would you talk about a little bit more your previous engagement with the city on the Shell Road? It's not even somewhere else. It's on the road, about literally 300 feet, 400 feet, about on the east side of it. Would you talk about a little bit more how many engagement you had with the city prior to this property already?
Yeah, definitely. So I've had multiple conversations with the city of Georgetown. We've had 3 pre-development meetings for, this site and another site in the area. So, meetings with the city specifically, that means meeting with the City Planning and Zoning Commission, the city utility director, and the city utility director. So presenting, this site, our plan, what we do at Arundel Investments when we're looking at a new development. We don't just go in, buy the land and then try to figure it out after that. What we do is we put the land under contract, we perform all of our studies, make sure that we don't see any issues with the land. Then we go to the city and we present to them exactly what it is that we want to do. We're very open, we're very honest with them and say, look, this is the project that we want to do. This is what we're hoping to achieve. And we get their honest feedback on that. So we present is a master plan in Georgetown, and this is this fits exactly with what they want to see in this area. We're not going to be having to, request any changes from what the city already wants to see. We feel like that's just, if you're trying to request a change in land use or something like that, it's just a risk that we don't want to take. So we make sure that we're working exactly with the city's plan already. So this has been presented to them. The site plans that you've seen, the concept site plans have been presented to the city. The unit density has been presented. All those things that could potentially be issues that maybe some other developers here have seen before and run into issues. We've taken steps to mitigate all of that by just having an open line of communication with the city. So that's been very very beneficial in planning this project.
Thank you, Andrew. Going through the question, Andrew, from the flood zone, that's in Zone X, right?
Yeah, so there's no flood zone on this site. Now, if you look at the graphic that Shrar showed earlier, it does show that, what looks like a waterway moving through the site. Now that isn't a river or anything where there's flood zone. That's simply a drainage channel from a neighboring property. So it's a drainage easement that runs across the site. No flood zone though. And our plan for mitigating that drainage easement is that we'll be rerouting it along the edge of the property. This is something that we've done on projects before. And essentially it'll move it right to the edge and it'll pick up, any water or drainage from the other sites that it needs to convey, as well as the drainage from our site, and convey it off site. So there's no flood zone, no risk, anything like that. There's another question here from Gene. What does it mean, private road 912? Is that owned privately and not a right of way for county, state, municipalities? I'd like to address that question as well. So the private road along the back, it is a private road, but it's not private in the sense that someone else owns it. It's private in that there are a number of properties, of which ours is one. There's about 13 properties total that butt up to this road, and there is a shared access easement along that road that allows all the 13 properties that are part of that to access this road for entrance in and out of their properties. So as one of those 13 properties, we own a portion of that road and we're allowed legal access to that road. It's deeded the same way that like a condominium common area would be deeded, where, you know, like, hey, you own a unit in this condo complex. You not only own your unit, but you also own a portion of the common area, and you have the right to use that common area. So the road functions in exactly the same way. And there's, you know, and with all or most private roads, this one being one, the city is allowed to use it for the purpose of emergency access. So, you know, the fire department, ambulances, things of that nature are allowed to use that private road if necessary. Our access along the private road is it'll be a secondary entrance for emergency services. And we've done all of our research into, you know, the easements and access rights on that road. And we have confirmed that, you know, the city emergency providers, as well as ourselves, have full access to that road at any time.
Okay, thank you, Andrew. And let me jump in with a couple other things here.
Mike, can I clarify one thing real quick?
Yeah.
Is this already on our portal or it's not on the portal yet? Because looks like it's not on the portal yet, right?
Yes, it is.
How you just checked and it looks like it's not there, so we can verify.
Okay. Yeah, I checked earlier today. It was there. Maybe we have it. Let me just. We can follow up.
Okay, so we can confirm by tomorrow, Hadi. Okay.
I'll do it. Actually, I can go while we're on the call here and see if share that. So thank you, Sanjay. One of the things I saw a few questions. One is investing with an IRA or solo 401k. Actually, this is probably an ideal investment for those, because, you know, the depreciation doesn't, you know, you're not gaining a depreciation from a separate one necessarily. So this is a great IRA investment or a rollover investment. So the other was, Schreier, maybe you guys want to talk back through. I see a lot of questions back and forth about how does the payout work for phase one, like the concept of, okay, we're going through phase one, and what you know, the value of that, and how investors will be paid from phase one by selling that over to the phase two. Well, yeah, so working from there probably, and just how does that return come, and how does the sell work kind of concept. I think that it's just a general thing I'm seeing throughout some of the things in the post here.
Mike, thank you. Let me take a shot at it, and if I missed something, Andrew and Paul, chime in, please. So we're buying the land, and we'll go to the entitlement process. That's the value add. There's no cash flow. It's the selling of the land to a developer or a builder. When the sale happens, that's the value, and that's the cash, that's the equity that we create, and we take that money and give it back to the investors. And on the phase two, the developing company could be us, could be somebody else. We don't know. Would like to be us. But from the clean exit perspective, is 2 years from now, we're going to sell the property. Once we sell the property, we'll take that property, pay down the bank, remaining of the profit that we have. We issue the pref checks, and then we split 70-30. Put together the pref and the split of a 70-30, it comes down to about 20% IRR, 1.4x, 1.45x multiple. So recap, we're going to sell the property. The selling of that property, it's the capital event, and that's where we take the money and, you know, pay off the bank and give a split with the investors.
Schreier, you're exactly right that we sell it at that point. And you saw the slide that Schreier had out. The other thing we're excited about is this land is not going to go down in value. And we're doing a bunch of comps on other land around there. And in fact, land is selling in some places higher than what we project to sell in 2 years, which is awesome. So it will be sold. Again, the buyer could be us. It could be the construction company to do the vertical and horizontal. And then there will be another opportunity for investment into that second phase. Andrew, do you have any other comments on that?
No, just, you know, that's what you said is exactly right. It's not it's not something where, we have to bring in other investor funds from phase 2 in order to buy out phase 1. This will actually be a clean sale, like Shirar said, that could be on the open market to somebody else. It could be to us. We don't know yet, but it will be to an actual buyer.
Thank you, Andrew. And I saw a question from Duri. There was another project, Austin's Gateway. Yeah, I think there are 2 projects, one from James Kandasamy probably, and then this is ours. This is the Barry Creek Uptown Home. It is not the Elgin project, it's the Georgetown project. So, hey, similar confusing name, but it's a different location.
We're the North
Okay.
Gateway, not
North
the East
Gateway.
Gateway.
Thank you.
Hey,
But the good thing is there are a few projects in that area which kind of, supports the need and the overall market demand.
yeah, I want to thank everyone coming. We're going to stay on for anyone that's got continued questions. So I know we're at the time, but we'll go 15, 20 minutes here with anyone that's got some more questions. I'm also going to put in the chat our YouTube channel, which it's fairly fresh, but all of our webinars and things will be there. So if you subscribe to the YouTube channel, you'll be able to get more access to follow up on this webinar, past webinars, future webinars, and so forth. So,
Mike, thank you. I want to answer the Chris. He asked a very good question. How the 7% pref return being accomplished. So pref to me, it's a guarantee that first 7% of the profit goes to you. So this is not a cash flowing project. It's a land development. So no cash flow up until the year 2, until the exit. What we meant here is that 7% will be accrued for first 2 years. So first 14% of the project goes to the LPs. And then anything above the 14% we split. That's the philosophy. And that's why we have the pref that, hey, first 14%, it's a guarantee to the LP. If we fail to deliver more than 14%, then this is all yours. Our goal is to make, deliver more higher returns so we can split, right? So that's how. So no cash flow in between. It's not a dividend play. It's a multiple play. We come in, go to the technical exercise, and we sell, take that thing, and we go. We feel it's a downside mitigated, which is the takeover operational volatility risk kind of sort of goes away. So it has a market risk, but it's a smaller market risk. On the upside, it's when we sell, we get it. So that's how we're looking at this project.
Schreier?
Chris, thank you. Yes, Paul.
Schreier, if I might
Yes.
just interject. I don't think this is really not a guaranteed return. It's a pref return. So we can never use the word guarantee. We aren't guaranteeing this. We could have World War III and there could be a nuclear invasion or whatever. But so it is the pref. Schreier is completely correct. The first you are on the top of the capital stack, and so you have a pref of the 7%. But unfortunately, nothing in this world is guaranteed. So.
Thank you. I stand corrected. So thank you. Nothing is guaranteed, right? I mean, that's based on the project, right? If I say 100% of the stock that I bought and I made money, right? And it's not that. What I meant is that the preferred, it's a lender, then the 14% pref LPs gets the second place, then we start splitting. So there's a hierarchical of who gets the fund, or who gets the profit, and how we split it. Thank you, Paul.
And thank you, Jacob, for your comment. Appreciate that.
I almost got myself into trouble, so thank you. Okay. The max investment. So there is no max, but if you ask me, feel comfortable with the amount. So we're trying to stick around at 75. If somebody wants to do more, please do that. And from the investment philosophy perspective, yes, I would like to have all of your money, but no, don't do that, right? And it's a small. It's like you have to roll the dice, one project at a time. So we have class C value adds, we have class B value adds, we have new developments, we have land play. So invest as you feel comfortable, but at the same time, 75 is not the minimum. It's just the baseline that we have, and probably we'll get some more, 2-3x of that as well.
Schreier, I might add something there too, if you don't mind. I don't know if one investor. I have to look this up again to be sure that cannot have more than about 20% of the deal.
That's correct.
So somebody wants to put in 2.5 million. I don't think we can accept
I
that.
think 350, 375 was the cutoff, right around 350 was
Yeah.
the cutoff. So nobody should be above 350. It's just technically, it's a recourse loan, then and we don't want you to be in the loan. You don't want to be in the loan, so that's the limit. But on the same time, if you and your cousin or your friend does it, fine, but not one person cannot invest more than 350-ish in that bucket. Thank you. Thank you, Paul.
Good questions, everybody.
How much GPs invested? That's a fantastic question.
Oh, yeah, I was just getting ready to.
Yes.
Say that one. Go ahead. Go ahead.
Everybody is playing, we are investing, right? I think massive perspective, we're going to invest, I think, right around 100-ish K or so. Then Paul and PSC is going to invest as well. So we're going to have our funds. So roughly, I believe 12-13% of the funds is going to come from us.
As with all of our investments, we want to invest alongside of our investors.
Yes, I think 100% of our deals that we have purchased, we have invested. And sometime, so the reality is we love the project that we do, and depending on our cash flow, we invest. We always come in at a bare minimum, but depending on the project, sometimes we do more, right? So we don't want to overcommit. You want to come in and say, hey, we do invest side by side with you. Nobody invests less than you. We always come in at that threshold that we do. Oh, thanks.
So I saw some comment. Does everybody I guess there was some other things going on with the sign up. I think Brooke added a new one, Maria added another one. So if you guys were having trouble with the sign up, there's another one in the chat if you want to try that. And I guess Hadi, we'll follow up. I went and double checked. I mean, it is in there, open to all investors to make an investment. So
let's take a look at it, make sure Hadi is in approved or something like that. Just maybe the system technical issue.
We'll connect, I guess, if he's still having trouble later. We want to make sure he gets in.
I made. Thank you.
Okay, thanks. Jonathan asked a question
earlier was different than the link Brooke shared. So just want to make sure everybody knows that.
What? Say it again.
It was a different link. So I'm thinking the link that was previously shared only had McCallum for some reason. So I reshared the link. That was the problem he was having. So I gave a different link that was updated.
Great.
He's good now. Yep.
Thank you.
Yeah, thank you. I'm good.
Okay. So Mike, Jonathan asked a good question. Kind of reinvest in the deal if you will execute phase 2, of course. So this is going back to our projects. We appreciate everybody who invested with us on the phase 1. That's why the investors gets the first right of first refusal for getting into phase 2. We would like everybody to stay in, but if you choose to go, that's fine. We appreciate for the phase 1. But yes, everybody who joins us for the phase 1, they're welcome for the phase 2. They get the first right. And second question was asked, okay, Jennifer, thank you. That's a very good question. So I'll give you a long answer. Under massive umbrella, 100%, we are 10 months old, right? We bought 106 million. 100% of our projects are at or above pro forma. So we have one project, we are slightly higher than pro forma, but all the other projects were way above pro forma as of now. And most of the cases is because how we bought it, how we put the financing. When market was crazy, price was going up and down, interest rates were going down. Last year, all the assets that we purchased together, PSC and Massive Capital together, we put fixed debt on it. And that fixed debt helped us tremendously. So we have assets at a 3.75 interest rate, all the way down to 6%. And everything is fixed. That's what we're performing. Yes, I know we have not done it in a full cycle yet under the massive umbrella. Paul has done it from the PSC perspective. Sanjay has done it before. He joined Massive, but under the Massive, we haven't done a full cycle, but all of our projects as of now, they're performing at or above pro forma that we have.
So I'll add that PSC has done about over the last 13 years with one of our other companies. We have done right at 40 full cycle projects. And of those 40 full cycle projects, we have always hit our IRR, our equity multiple, ARR, and more. Because you got to imagine, as developers, we can't promise something we can't deliver. So if we start doing that, we're not going to be in business long. So, you know, it's the old adage of under promise and over deliver, and that has served us well forever. And so that's why we are able to reconnect with our investors over and over again.
Thank you for asking the question, Jennifer. Good question. Okay. I see any other questions? So I think we covered all the questions were asked. If it is not, please go ahead, Mike.
No, I think we did. I'm just gonna put again. So we're, as I mentioned, we're asked about the recording. We will have a recording. And if you sign up and actually help us get as well, I'm gonna put in for me as being part of the marketing side and pushing some things. We're trying to get our YouTube subscription up. So we're at about, I don't know, about 80 subscribers. We just started a couple weeks ago. So if you can help us increase that as well on subscribing, and then that's where all of our webinars will be now and in the future, and you'll get a hold of some of our past ones as well. I'm going to put the link in here again. So we appreciate anyone's support as well. Sign up for our YouTube channel, subscribe. Get us going up on that so we can improve our professional side on the YouTube.
Thank you, Mike. Thank you.
Got to pitch other things in the deal sometimes.
Hey, and also, and just to kind of recap, right? This Friday evening, we're hosting a webinar. I'm sorry, hosting an in-person meetup. Anybody wants to shake hands in person, please join us. Almost all of our team will be there, and I would love to see you in person as well. If you're in Houston, hey, here. So I see some messages. Okay, that's all. And thank you, everybody. We really appreciate you hanging out with us for more than an hour. And I know this is the middle of the weekdays, weeknights, especially folks with the kids. So really appreciate it. And from the massive team, PSC team, and Andrew, thank you, everybody, for being here as well. So we're going to shut it down for now.
And I think, Schreier, we're going to present this project again in a few weeks, right?
Yes. We'll do another round 2 that's coming in. And hey, you guys are welcome to look at it, send us some questions, and also join the other webinar if you guys have any questions. And we'll appreciate those questions as well, right? The more the investors ask, better it is. So don't be gun shy on the questions. Andrew has all the answers. I bet my money on it.
Andrew, thanks for all your answers.
Thank you, Andrew.
Appreciate it.
Yeah,
Thanks.
of course. Anyone has any questions, feel free to reach out. I'm happy to chat about anything. I'll try to have all the answers.
Hey, Andrew doesn't talk much, but if you want to talk about land development, oh, he will go. So he loves his stuff. That's all I can say. Thanks, Andrew, for everything. Really appreciate it.
I like all that boring technical talk.
That's not boring, man. That's exciting. I mean, on desk, if I don't have to get up on my desk and do everything, this is cool technical stuff, if you ask me. Hey.